How we doing?
Good. I'm good.
Good. So I have a question. I saw that the Feds had announced that the rates are going up.
Yeah, they had a meeting on Wednesday.
A
Yes,
meeting.
they had a meeting. They had an announcement, which they do this all the time. But the markets watch very closely as to what they say. I mean, they're dissecting like every word. Did
Right.
they awkwardly pause during these times? It's a little overdone, but that's what the analysts are paid to do, so that's what they do. So.
Well, low interest rates are like pretty important. So we're thinking like, does it mean that they're going to go higher?
Yeah. I mean, the Fed has been artificially holding rates low for a very long time.
That's true.
They're pumping billions and billions and billions of dollars worth of, buying mortgage-backed securities to keep them low. The market wants to go higher, but I think they recognize that, we're still in a recovery. So if rates go up, do we hurt the recovery?
Like
So
what
I understand what
happened?
they're
Yeah.
doing. Right.
I mean, that's the big question, like the ripple effect. So how do you think that announcement, like, what does it actually mean? Is it talking
Okay.
about like the interest rates for buyers?
No,
Okay.
not at all. Not at all. That's what's weird about it, right?
Yeah.
So people hear the word interest rates, and I think they always just think of like, oh, my mortgage,
Right.
My mortgage, or what I can buy a car for.
Right.
Right. They're not talking about that. So what they were saying is, here's what the market didn't like. They came out and said, hey, inflation is running hotter or higher than we initially estimated just 3 months ago.
Okay.
So we're going to be patient with our rate hikes. We're going to keep them at zero. Okay.
Oh, I thought they said they were raising them.
No. Well, here's what happened. They did. What they said made it happen.
Okay.
Not what they did, it's what they said.
Okay.
So what they're talking about is they're not talking about mortgage rates because mortgage rates aren't zero, right?
Right.
So what they're talking about is the rates in which banks can loan money to other banks.
So that has been zero. Banks loan money to each other at zero.
Yeah.
Interesting.
It's to help the so a small community bank, like a bank going down can have a big ripple effect on the economy, right?
Right.
So bank is struggling or needs some funds, they can tap the JP Morgan, they can tap US Bank,
Bigger banks
can afford to give them a little bit of money. They're going to get paid back. They're just not going to make any on it. But it's kind of like, hey, I'll help you out. Let's just not cause a big problem.
And so then, but how at the interest rate that they borrow money from other banks, I assume they're borrowing money so that then they can lend it back out to consumers, right?
Sure. So yeah, they get to keep a spread, of course. So I guess it's not just if they're in trouble, they could borrow money and then loan it out at 4. If they borrow it at 0, loan it out at 4, well, now they make 4.
Right.
They keep the spread. But what happened with the Fed is they said, we'll be patient because inflation's running hot. That can kill the economy or hurt the economy, not kill, hurt the economy.
Killing is very dramatic.
Yeah, patient with our rate hikes. And by saying that, they spooked the markets and mortgage rates kind of went nuts. Bonds hate inflation because bonds I'm going to get fixed dollar amount payments into the future. Well, if you're going to pay me $500 a month on my bond now and $500 a month on my bond in 10 years.
Why have the bond?
Well, then the rates, like if inflation's hot, now I don't really get $500 in 10 years.
Right. You're getting less. Yeah.
So bonds hate inflation. Everybody sold their bonds, and that's what causes mortgage rates to rise.
So, okay. So then what do you think about, since we're talking about mortgage rates, I mean, do you see them going up soon?
They've already kind of started off of that bottom, that ultra bottom low that we saw. But historically, again, it's they're amazingly low. Mortgages are tax deductible, so that helps with your taxes. And then, anybody who bought a house in the 1980s can tell you that when they see a 2 or a 3 in front on their mortgage rate, that they're very happy. It's also single digit, which helps. So
Yeah.
they
Well,
were
I just, hey,
15%
Sheila,
back then.
we were talking, Sheila's on, she asked, what announcement? So the feds announced that they were, keeping the interest rates well, Jeremy, you say it.
Well, yeah. So they said they were going to be patient. We're going to keep rates at 0. Well, and mortgage rates have never been at 0, so they're not talking about those. But by saying that, they spooked everybody. They spooked the investors, and they all started to kind of run.
So what is your advice for people that are looking to buy now? Do you think that now, like, what are your thoughts on buying now versus later?
Well, I think the housing market's going to continue to do well. It's the number one wealth generator out there, period, hands down.
Real estate is.
Yeah, I mean, you need a place to live anyway. That's always been my pitch or my view on it, I guess, is, you need somewhere to live. I put something on Facebook recently, and it was, home value. Imagine if you bought at the last year at this price, it was like $3,000 a month in equity building. Now that's not as good as cash in your bank account, but it is the next best thing.
Right.
So that I'm paying down my balance, and my house went up, so that I netted $3,000 a month. I mean, how many people are saving $3,000 a month out of their paycheck? So if you can save money out of your paycheck and own a home, or 2 or 3 or 10, you are saving money every month. It's just in, the house bank instead of your own bank.
Awesome.
You'll get one day.
Yeah. Well, it can be confusing when they make announcements on the news that uses terms, and we relate it to our situation, like the term interest rate.
Right.
We relate it to buying homes, versus they're talking about the banks and the interest rates in the banks. But I know the public should care about that, but there needs to be, it would be helpful if there was some context.
Yes, that's the issue. Like, just don't say the word interest rates. We're going to be patient on rate hikes, right? Like, be a little more specific so that more people understand what you're talking about.
Yeah, no, I get it. So, well, thanks for clarifying. And if, just so people know, you are Jeremy Pope, the Pope of Loans, as your wall says, with PRMG. And where can you do loans?
Ohio, Indiana, Kentucky. So
awesome. And what's the best way to get a hold of you?
Cell phone, text, call, 513-432-6971.
Awesome. Well, thanks, Jeremy. Have a good day.
Thank you. You